Good evening, everybody. This is Jeff Scott. It is May 11, 2014, and I apologize for the late broadcast. I can't blame it on Mother's Day because I'm not a good husband and son as I'm in New York at a conference and not with my wife in Florida. That said, I've had a wonderful weekend. Entertained, I guess is a fair word, by Alexander, Elder, and Carrie at the Spike Traders meeting. Outstanding meeting. Those who know me and listen to me know that I'm on a journey to become my own guru, and that part of my theme of working with people, and I know what I've learned from Ian and others, is to teach you to be your own guru and not for you to rely upon people. And Alexander Elder, I've read his books. I participate with both Alex and Carrie in the Spike Traders group, and it's so wonderful to be here spending 4 days trading with them. So I titled today Divergence, and to me the divergence that's going on is not necessarily MACD divergence as much as it is the large stocks, the dividend stocks doing extremely well and at all-time at highs, while the small stocks, technology stocks are floundering. And that's a divergence in the market. It might be a sign of a top, and we'll see as we go forward. I think everybody is bearish and calling for this to be the top, which means we'll probably get a rally. We'll talk about the futures in a second. As always, this is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments, and I've had that happen to me. Hopefully won't anymore, but in the past, especially 10, 15 years ago. And although I am clearly a homer when it comes to HGSI, I am independent. I am not paid for any of the comments I make. And in fact, I have personally paid for all the tools that I demonstrate. Now, there are lots of people that influence me, and hopefully you'll take the time and learn about these and others that you want to consider to be your guru. And just to point out, always want to give credit to Ian and Ron. Much of what I do and I talk about, I learned from them and with them. William O'Neill, the godfather of high-growth stock investing, editor-in-chief of Investors Business Daily and Market Smith founder. And then his disciples, Gil Morales and Chris Katcher. Jesse Stein, Mark Minervini, Steve Bigelow on candlesticks. And most importantly, just want to highlight two of the others here. These are the books from Alexander Elder. Highly, highly recommend them. In fact, you should take a look at spiketrader.com. Different verbiage than what we use in HGSI. We get married at the hip when it comes to Alex's work with force. And I find it very complementary to what I do with HGSI, and also to John Person, and to give a shout out to John, who, two things, he'll be doing a meeting over Father's Day weekend in LA, sponsored by TradeStation, that I'll be attending as a attendee, and he'll be speaking at my meeting in June. He's actually almost my neighbor down here. As I always joke, there are lots of programs out there, and I've probably owned all of them or most of them. I love it when somebody tries to stump me and I show them where it is on my desktop. But what I really need is a real-time trading platform, either TradeStation or Thinkorswim, and then a tool for analysis, which I think HGSI is by far the best one. EdgeRater and ETF Bandit, where I do some market analysis and also for scanning for stocks. Seasonal analysis, Magenta Trader or Best Choice for Trade Miner. And then Market Smith are the tools that I use. As always, I remind myself that stock patterns are cyclical. It's kind of interesting. I feel like we're doing this in stage 2 on the big stocks and doing stage 4 on the small stocks. Something has to give. I can't imagine that we'll go on for many more weeks or months with one market leading and one falling concurrently. I think odds are that we're probably still in that red circle area, but it wouldn't surprise me to see us do another leg up on the small stocks, and then the summer month doldrums will come in and then we roll over. But don't trade the market I think we have. trade the market that we get, and we won't know what we get until a few more hours. I always like to remind people of this. In an uptrend, which we've had for most of the last couple of years, doesn't really matter where you buy, because as long as you're not the last person buying, you made money. But the safe bet is to buy on pullbacks, and I'm a pullback investor. They talk at this meeting here with Carrie and Alex about what's your A trade. This is my A trade, is finding a stock that's in an uptrend, pulls back to support, and buying it when it develops momentum. So I want to buy in the green circles. In a downtrend, so the big stocks you're doing well on, you're probably not doing very well on your little stocks if you're long, and that's because they're in a downtrend. And the only place to make money long on a downtrend is a counter-trend retracement. I don't know how to make money there. It's too short of a period of time. If I go to the bathroom, I'll miss it. Sorry to be too illustrative. So I want to short this market, and I want to short this market during times of these retracements. Now, we've been living, you might argue, over the last month or so in a Darvas box, where you want to sell resistance, buy support, and frankly, we've been stuck in the middle. And it may just be that the large stocks and the small stocks are at different periods of time within the same trading range. If we break out above or break down below, that would be a time to go back into a trend. So you have to know the market you're in. You have to trade accordingly. Now, what I love about HGSI is that as you look at the cycle from fear to euphoria to fear again, we have a number of indicators, many of which are adapted off the work of Arms and Elder and Bollinger and others, and they help us to understand where we are, and then I utilize these indicators in how I trade. So one of the nice things about HGSI is you can make your own indexes. So we like to create indexes to give us a sense of what's working or what not working in the market. The Canaries are, you can see Priceline, Apple, Amazon, Google, Tesla, Facebook, LinkedIn, and Netflix. These were the big boys a year ago. These are the ones that were all momentum and story stocks. And many of us felt that when these fell or gave up the run, that this bull market would be over or might be over. And you could see the Canaries have died, and they rolled over in early March. But they might be showing a pulse. And they bounced off now twice the 200-day moving average, and are sitting right on it today. So this would be the last stand of custard. Hopefully they'll do better than custard, because if not, they go into free fall territory. But it's held multiple times, both the 200, and you could argue there's some horizontal support there. So I'm hoping for a bounce. We'll see. The October LLURs, this is nearly 6 months, 8 months ago, when we took the best of the market at the PB meeting in October, and the goal was to identify a group of stocks that when they rolled over, it would give us a sense that the market, this current market, was done. This is a much broader index. You can see the stocks here than the Canaries, and you can see it did not roll over until the end of March. Interestingly, even though it's rolled over per se, it's lingering around the 50-day moving average. Now that 50-day has gone from being support to potential resistance. So I'm watching this again to get a sense of what the market does. A decisive break and close above that 50, followed likely by a retest of the 50. Although I'm not counting on it, maybe don't expect it, would be a nice sign of a change in the market and perhaps another leg up. Now, the happiest list, these are the lists that we chose just 3 months ago in March, a little bit less than 3 months ago. And you could see that the LLURs, the leaders from the March meeting, are still leading as they continue to go up and approach new highs. And what's interesting is they are, I'm sorry about that, a combination of big stocks and little stocks. I'm just opening that up so people who don't know what we're talking about can stop it and see the stocks that are part of this. These are a bunch of big stocks. When you look at, not necessarily big stocks, but CBS and Halliburton Delphi, Signet Jewelers, United Rentals, Chicago Bridge and Iron, Level 3 Communications, Texas Industry, Applied Materials, SanDisk. They're not cha-cha-cha high flyers like Netflix, LinkedIn, etc., but they are still holding up, even though many of them are NASDAQ stocks. So this is the beautiful picture for the bulls that want to believe that this market will continue to go up from here. And, you know, it has not rolled over, and that's when we will get nervous. Market themes, almost the same as last week, except we had turnaround Tuesday in reverse. Typically, we start off with a bad Monday, and we recover Tuesday, and then the rest of the week, we don't go much as we try and see if we can hold those gains from Tuesday. This week, we had a decent Monday. We got clobbered on Tuesday. Continue to see highs in the large stocks and chop for small stocks. Continue to see bearish sentiment growing, and maybe it's growing enough now to that we might see a rebound here. Interest rates clearly on hold. And some of the winners are the same as last week, especially the yield drivers, gold and silver, continue to stir with massive MACD bullish divergences in auto dealers and auto parts. Not going to say much about this except my retreat in Singer Island. I've got 18 of 20 spots filled. I'll take 23 at most because I might have some cancellations. The hotel is holding our block at $189 a night until June 6th, D-Day. This is a great hotel, and it's a nice rate. It's worth taking a couple days to go to the beach as well. Week ahead, you got to know what's coming on the economic calendar. As I look through, there once was a time when I'd be nervous about CPI and PPI. As long as we don't see a deflation, we're probably fine. The initial claims and continuing claims on the 15th may provide some movement in the market. Housing starts, building permits, and University of Michigan, go blue sentiment may also be important. Earnings getting less and less, a couple of big ones to be aware of. GoGo, the airline internet, Hertz. Zinc, which is Horsehead Holdings, which is a, I believe that's what it is, a miner, is important. Fuel Tech likes to disappoint on earnings. You can see McKesson, one of my picks for the week. Like them a lot, but I won't touch them until after earnings come out on Monday night. As the week goes on, you can take a look here. I get these from Leavitt Brothers. You can go there and get your own list. Some of the solar stocks at the end of the week, I'll be watching those. Blog, I know several people on the HGSI land own that as well. It's your business to know when your earnings come out. So now let's take a look at some of the data. As I mentioned, the market futures were up when I last looked, so let's take a quick look-see. Actually, it's already open. And you can see they are maintaining about 20 up on the NASDAQ. I'm not surprised. The NASDAQ really finished up nicely on Friday, and maybe we'll get some carry through. You know, I like to look at other data, so very quickly, using EdgeRater, I create, and HGSI, I create a number of analysis on a weekly basis that give me a sense of what's working and what's not working. So the week ending 5/9, which is Friday, if I went from Friday to Friday, buying at the close last Friday and selling at the close this Friday, these are some of the many lists that I look at on a weekly basis to sense what's working and what's not working. As you know, the S&P 500 was down a teeny bit for the week, but the part that should make you aware of not all is good in high growth stock land and can-slip land is that the IBD 50 was down 2.71, the HGS 100 was down 3.3%. And here's really the story of the chart. High beta watch list. These are 105 or so. Actually, it was only 88 this week when you put in the price and volume filters. 105 stocks down to 88 with price and volume of the high beta momentum cha-cha-chas, and they were down 6.57%. So that's I think that tells you what's not working are high beta stocks. Bible gap ups from Morales and Catcher. These were Bible gap ups that I found on Friday a week ago. Well, this was in one of my searches, was up 6%, but it's only one stock. Really a not too beautiful week, a lot of downside. Bucketology, I got something different here to show you today. Let me hide the bottom and just show you the top to start. So for those of you who I met at the elder meeting that might be watching this or people new, one of the things that we try and do to gauge the health of the market is to look at Bollinger Bands and where stocks close, and that's called percent B. So if you tell me percent B is 0.5, I know the stock closed in the middle of its Bollinger Bands. I look for the extremes. When do I get a lot of stocks above and below? How many stocks are above and below the midline of the Bollinger Bands? And I do this on a nightly basis. I know that when I start to get 20 or 30% in the last two on the left, which would be below the S&P 1500 Bollinger Band or at the lower band, that the market will reverse within 3 days. I showed that research a couple of weeks ago. I know that getting a lot to the right does not necessarily mean you have a pullback. You can go sideways for a while. This is sort of neutral, okay? You think about the 1500, it's got the 600, which is small, the 400, which is mid, and the 500, which is large in it. So here's a different picture. This is why your growth stock portfolio is feeling the pain. Whoops, I think a picture tells us 1,000 words. And what you can see is when I ran my high beta watch list, you can see that the high beta stocks are hammered 76% below the midline, a total different picture than we saw from the S&P 1500. And perhaps it's time for some reversion to the mean and some improvement in these high beta stocks. We talk about the Hindenburg omen and that they typically fire at times of market, before market corrections. Now, reality is they're not perfect. About a quarter of them are negative, are real. The rest are false signals. You look for a series of them and you get nervous. A single one doesn't mean much. There has not been a major correction in 50 years without a signal. And as I go down the list, you can see that on 5/9 Friday, we met 2 of the 4 criteria, so there's no Hindenburg signal. Not going to spend much time on this, but within EdgeRater, we can scan for types of signals. Both George and I like to find stocks that are squeezing and then have momentum or breakouts, whether it's a PSAR reversal, a MOBO breakout, or a pocket pivot. So Wilder, Morales and Catcher, Wilder, David Elliott, and Morales and Catcher, so some of the masters. And this scan, I can scan my stocks in 2 minutes and get an idea of what stocks are meeting these signals, and I can even pull them up and look at them in the charts. Code blue is for Chris Catcher and Gil Morales, and these are some of their top stocks using scanning that they would look at and they talk about on their webinars, and they involve pocket pivots and what we call Kahuna Force, which is when you have a Bollinger Band move, percent B greater than 0.24 in the presence of both Force 2 and Force 13 up, and Kahuna Force is a very powerful signal of momentum that we use with HGSI. So we have the stocks that are working. You can see we've got 40 of them that had Kahunas -5, so 35. In the code red land, you can see we have about the same. So that would be a fairly neutral looking market. In a powerful market, this sheet is kind of empty and vice versa. And then lastly, the market view, and you can't tell anything here, but what I look at is this last, where my cursor's going, which is the percent B times bandwidth, giving us a signal. Green is buy, yellow is intermediate, red is sell. And what I want to point out is that this is the longest period of time of chop or negativity in the market that we've seen going back well over a year. So this feels different this time because it is different. Now, what we're feeling of late is less than we were feeling as this period of chop was entered. And if I scaled it up, you would see that we've got some big stocks showing some green and the little stocks showing red. So what does this tell me? It tells me that the market's in neutral. It could go either way. I'm betting that we get a bounce, but I'm still concerned the period of time of the year and the low number of great setups that I saw in my market scanning this week. Then I want to look very quickly, since I'm here with Dr. Elder, would not want to skip looking at the Elder signals here. And so here's what's interesting. If I'm going to look really at one thing that really matters, and that's the impulse indicator, which is how he paints the bar. Now, a green bar on the impulse indicator tells me that it is okay to buy, or as he says, the buying window is open. Don't have to buy, but I'm allowed to buy. If it's blue, I can do whatever I want because it's in neutral, and if it's red, then I need to sell or hold. I can't be buying. So you notice that the Dow is green, green, and on the weekly and blue on the monthly. So if you want to be buying in the Dow, you have the window is open. Now, two things matter in this. One of the things that matters is the MACD direction. And you can't see it too well, but it is moving up a little bit, so that's half of it. And the other one is price in related to this red exponential moving average. And this is also above it. So price above the red, rising MACD equals green. Price below the red, dropping MACD equals red. And one or the other positive, the other negative equals blue. So green and blue, Dow currently doing well. And like I said, the buying window is open if you're interested. And you bring it in and you can see that the Dow is near and approaching new highs. These were some bearish divergence, those red dots, and they led to a pretty massive fall in the Dow, much of which has been recovered. I look at the S&P 500, and what do I see here? Blue. So what's going on here? Price is above the red, but MACD is definitely going down. And so blue, green, and blue. The S&P not as strong looking as the Dow, which is certainly the leader right now, but the buying window is open if you want. Holding or even selling are allowed with the blue. Where it gets a little uglier is when I get into the NASDAQ. And what you see in the NASDAQ is the buying window is closed and the selling window is open. No shocker. Now, I do want to show something. That's not working. It looks like the MACD here is flattened out. We could actually look at it here. Let me see if I'm seeing things. So the MACD here on the 9th was 23.9. It was 23.77, 23.99, 23.77 on the 8th. So this MACD is wonder why that. So that MACD is actually going up. Unless I'm looking at the wrong thing. Maybe I'm looking, here it is. Histogram, I'm sorry. On Wednesday, the histogram was 6.65. On Thursday, the histogram was 1. And on Friday, the histogram was 0.45. It will not take much of a move in the histogram to turn that positive. On the price below the moving averages here, it closed at 4071. Crossover tomorrow is at 4071.29. So the market is going. This is going to turn blue tomorrow unless the Dow opens up and or the NASDAQ trades negative. So there's certain things that support to me the idea that we're going to see a bump. Now let's go into HGSI. I'm opening up the warehouse module. Since I've changed my resolution, I'm going to have to adjust everything. I'm watching it on a second computer, which is an iPad. I'll tell you, if it doesn't look good on your computer, then play it on your iPad because the resolution looks great on the Retinal screen. I'm going to go down to user groups. I'm going to go to Woodward and Brown. I'll use the 0424 group. Let's look at Major Markets Plus, and let's go to top-down view. So very quickly, top-down view looks at most heavily weighted as yesterday, then the week, and then the last 2 or 3 weeks as we rank the different items here by what's called a combo rank. And that combo rank includes price change 1 day, heavily weighted, force 2 and force 13, accumulation distribution, and then a minor weight 5-day price change. And then we come up with a ranking, a number, and so it tells us the strongest thing in the market based upon this ranking over this period of time is the U.S. dollar. Now that's bad if you're an investor because typically stocks fall when the dollar rises. And right now the dollar is leading. However, that's not what's occurring because the Dow and the transports and even the small stocks, because of performance on Friday, have moved up to the top. What's on the bottom are utilities and volatility, silver, gold, and commodities. Now that's kind of interesting. The silver and gold sitting down there makes sense with the high dollar, as does the commodities. Utilities being down at the bottom, that's a great thing because that suggests that some of the fears come out of the market and maybe we see some rotation back into high beta and growth. Over 5 days, you could see the big losers were small stocks down about 2% on the Russell. Silver, also a loser. Winners over 5 days, not much. The industrial was up, big stocks leading, as we said before, as was the dollar. Transports were up for the week. If you look on Friday performance, small stocks had a great resurgence. It'll be interesting to see if there's any follow-through or continuation. Now, I also like to look at some of these charts, so very quickly, let's look. And I'm just going to leave off the indicators and stick with a simple-looking chart. And I'll tell everybody what's in this chart because there'll be some people here that are probably new. I'm sort of a simple guy. I don't use all the power of HGSI, but I get all the power I need out of the pieces that I use, if that makes any sense. So this is a simple view of the S&P 500 index. And I'm looking at the 200-day in red, the 50 in blue, the 17 in green, and the 8-day exponential in magenta. What do I see? And let me look at a weekly very quickly. And what I see is that, let me make it bigger, that what I'm feeling is that we're living in a bit of a trading range. And, you know, I could have brought it down here, but right now we're in that Darvas box, and until I break above or below, I'm going to look to sell resistance and buy support. So the S&P has moved up a lot and is frankly sitting right underneath resistance with the doji on Friday. That's on the weekly chart. On the daily chart, this is where I see resistance, and we're right, you know, we've got a little bit to go. Let's see, trend line. A little bit ways to go, but not much before we hit that. So will we break out? Will we remain range bound between the rising 50 and this line until we break one way or the other? Will the small stocks pull us down, or will any strength in small stocks propel us? I guess time will tell. as I look at the NYSE, which is a big group, a lot of big and small stocks, it looks a lot like the S&P 500, much closer to a high. And again, the 200 is below the 50, which is below the 17, which is below the 8. That's the healthy way that I like to see these things line up. I look at the NASDAQ, not so healthy. This is what we talked about last time. We saw that it held on the 200. Let me clear this up a little bit. And the NASDAQ sort of stuck between the 50 and the 200. It'll be very interesting to see, is there some kind of a, can we break through this triangle? And will we break through on the upside or will we break down? Futures look strong. We'll have to see if we can get above this and move further up, or are we about to break below the 200? This is what you have to watch, and it's really difficult for me to tell you what to do with your positions until we see what way the market declares itself. I look at the Russell. This is the worst, and you can see with the Russell that it's broken down below the 200. It did have a good day on Friday, and it's certainly the most beaten up of the major indexes. If we look at the dollar, it's going to hit resistance here at this 50. We failed at it here, failed at it here. We'll see if we fail at the 50. Maybe we'll break above it for a couple of days. Still, the dollar is at a downtrend, although Monday, Tuesday, Wednesday, Thursday, Friday, except for Monday, the dollar had a very strong week, but it's right up at resistance. If I look at gold and silver, where there's massive divergences, gold looks stronger than silver, sort of living here. Is it putting in a base? Maybe. Still got to get above that 200 and that 50, and silver will look considerably weaker, much below the 200 and the 50. Once I get a sense of what the market's doing, one of the things I like to look at is going to broad market indices, because now I have volume. And I'm going to have to, let's see, I'm going to go to no filter. And we find the S&P 1500. So I'd like to study the S&P 1500. Forget that. I'd have to calculate the index. I'm not going to do that. I was going to look at the percentage of stocks that are trading above or below the certain moving averages. For the sake of argument, since I started doing it, but I don't want to do it that way, let me just open up TC 2000. Look at a couple of charts here very quickly. Okay, so I want to go into the, come on. It's funny, I got great internet access here. I'm surprised why it took so long. I want to look at the T2s, and I want to find a couple of them. So I want to get to here it is. This is what I want to look at. So this is a comparison chart on a weekly basis. The yellow is the spiders, and this is the percentage of stocks above their 200-day moving average. So when you get to be really high are periods of time that you probably expect there to be corrections. When you get to be very low are times you'd expect a turnaround in the numbers. So we're neither high nor low, we're in the middle. You look at percentage stocks above the 40-day moving average. I drew this trend line a few weeks ago, and this was a trend line that we seem to be hitting. Every time we hit this is when the market would reverse. We're sort of in the middle here on the weekly. If I go to a daily, also in the middle of where we've dropped to before we reverse. So no signals are here. There's something else I wanted to look. I look at the NASDAQ advanced decline line. This is kind of scary, as you could see how the NASDAQ advanced decline line has taken a big drop with this correction in the NASDAQ, and you could see that typically the spiders follow the NASDAQ as well, and you have a divergence here with new highs on the spiders and falling new advanced decliners on the NASDAQ. This is the advanced decline line on the Dow, or the S&P 500 rather. I'm sorry. And you can see when it dropped, so did the market, and at new highs essentially here. New high versus new low ratio, sort of in the middle. So I use lots of different resources. Those are a couple of them. The next thing I do is I want to all right. Did I go in the wrong group? Let's see. All right, I need to do a very quick recalculation here. So I'm going to stop the tape, and I'll be back in a minute. All right, I'm back. I'm sorry. I did have to do that, but I didn't like how it was indexed. So you can see now we have the new HGSI indexes. They've switched from bar charts to, I can't remember who it was. Yep, doesn't really matter. There's 196 industries now, so we've gone from 140-ish to 196. And this will give a better differentiation on a number of things that may have been jumbled within energy and pharma, biotech, etc. So I want to look at what's moving now. So I'm going to go down at two-day force up. So we use two-day force because it's the fastest acting to tell me what's really moved the last 2 weeks. It looks at price and volume. And you can see a big change here, and that biotech is up at the top. So I'm going to go through the first 10 and show you how I look at these. I do a right-click, change index group. This is one of the top 3 stocks. All looked interesting to me this week. And I'm going to open up Motivation, and then I'm going to put my favorite view on it. So here is what this has for everybody that's not seen this before. It has my usual 17, 50, and 200-day moving average, the 200 in red, the 17 in green, the 50 in blue, and then the 8-day exponential in magenta. So that hasn't changed from prior. I like candlesticks. This is your Bollinger Bands. And then somewhere in there, this darker line where my arrow's on is the strength of the group. And these are parabolic stop and reverse, which is something that I like to use as one of my momentum signals. Some people use them as a buy stop, sell stop signal as well. On top of it are a bunch of momentum indicators and technical indicators. I have the bongos here. We're going to hide the Hindenburg because I don't believe that it went positive there. So we got the bongos, which are multiple different Wilder indicators and price action. During periods of sustained moves, you expect the weekly to stay a single color, green up, red in the downtrend. The daily, in periods of retracement, will go to green or in pullback. They behave similar to the force, 13 and 2. Here's accumulation distribution. On this, I have the high jump bar with red candle highs and green candle lows. DMI crossovers, viable gap ups, squeeze indicator, and mobile breakouts. Below that, I have pocket pivots. Up in blue, I have Eurekas and Phoenixes. which are on the NYSE, and then I have volume in both of these, one with a limiter on it, one without, and these are kahunas, which are signs of a big move within the Bollinger Bands. So most of these technicals are momentum indicators, and what I'm looking for is to see a stock pull up my A trade, rising stock, pull back to support, and then see momentum coming in. So Medivations had a pretty deep pullback, but it wasn't an upturn on the weeklies, turned around a few months ago and went down from the near 90 down to 55, 56, so a huge pullback. So it came out with earnings. Their sales of their single approved drug far exceeded the market expectations. And what we saw on Friday was a Mobo breakout from a squeeze, a DMI crossover, mostly green on my technicals, a pocket pivot, volume come in, and a kahuna. I see this as a very attractive stock. It makes money. You can see some of the turnaround from a loser to profitable, and I believe that this one is at a nice place to buy, and I put it on my buy list. Gilead Sciences, another stock that I've been a fan of for a long time. Steep pullback, steep move up, pullback to the 50, gave us a great buying opportunity. I've been in it now for a couple of weeks. People know that I love this stock, although I got stopped out up here. And on the daily, I see a stock here that mostly green above, mobile breakout without a squeeze. Certainly could come back and test the 50, but I think that the nonsense that the Waxman and other congressmen caused when they wanted them to lower their price, which Congress, unfortunately for them, have previously legislated away their ability to force pharma to lower prices. You could see the earnings per share growth, and this is before their knockout earnings, 20% growth on $7. Stock's probably worth quite a bit more than $78, and they knocked their most recent earnings out of the park. MPS Pharmaceuticals, I don't like this one as much because it fell below its 200-day. It's got a PSAR sell, sort of a mixed hodgepodge here, had a mobile breakout from a squeeze earlier in the week. But what I do like about this is it did have a pretty big day on Friday. It had good earnings. It makes a little bit of money. It might be one to watch. Pharmacyclics, this one got hammered, still well below the 200-day moving average. I don't like to buy stocks below the 200. Celldex, this was a darling of the market on the way up and a dog on the way down. It's probably too early for me to be jumping in. So there's a lot of crap still in biotech, but a couple, especially Gilead and Medivation. Celgene has been a stock I've been long-term in. I got some married puts, which I probably need to cover soon. It's still meandering below the 200-day moving average. I don't like to buy things below the 200, but I might be looking at this in TradeStation, looking at MACD divergences. Go back. The next list is local media, change to media group. So 21st Century Fox. I know Walt Disney looks great. Let's look at these couple. So here you have a stock that's pretty much been going nowhere for quite some time. It pays a little dividend, 0.7. And see how it all went green on Friday? Kahuna on big volume on Thursday. They must have had some good earnings come out. Not my cup of tea. On the other hand, I do like Walt Disney. Whatever happened to Disney? It was in an uptrend, has been going sideways, had some good earnings come out. You notice when I say I like it, I got the 8 above the 17. I got the 50. The 17 would be nice to see it cross the 50, which it probably will do on Monday if it's up, and the 200 on the bottom. So not as pretty as some of those biotechs. Probably a good time to be looking at Walt Disney. All right, what's the next group to take a look at? Next group is specialty retail. Office Depot, take a look. You see the EPS ranks on these are all, earnings haven't mattered of late. These are all turnarounds. Their relative strength, horrible. except for Build-A-Bear Workshop. So why is there strength in Office Depot? I have no idea. Maybe earnings came out, broke above the 200. Big volume coming into the chart. See on a weekly, rebounding up here. Technicals turning green. Again, not my cup of tea, but it has broken above the 200. Still got some more repairing to do. Staples, well below the 200, moving up though above the 50 here. Zale, I think they're a takeout, and I think they turned down Signet Jewelers' bid. So maybe some people with the pocket pivot Kahuna volume in the green here think that they'll get a bid from somewhere else, or rather, Signet will come back with a higher bid. The stock was trading about 15, and they got a bid 50% higher, and I believe it's all cash. Signet, I think, was here as well. Guess not. We'll see if they get a higher bid on Zale Corporation. Next one down, specialty apparel. There's some things to like here. And in fact, if I was a betting person, I think this is a group that's on the move. And I saw a lot of positive MACD divergences. Let's just look through a couple of these very quickly. Gap had some decent same-store sales and earnings. You could see on Friday a pocket pivot, huge volume, and a Kahuna, a mobile breakout from a squeeze. This is not, none of these stocks are going to have great charts. We're not in the midst of a good bull. But, it's been an uptrend. It's gone sideways, sort of in the area of a squeeze here with the mobile breakout. I like Gap. I like it here. L Brands, below its 200-day moving average, had a nice move up. I prefer Gap. Urban Outfitters, again, nice move the last couple of days, but it's still in a downtrend. But I like everything here turning green, a mobile breakout from a squeeze, a pocket pivot, and a Kahuna. Those are the things I like to see. So I would keep an eye on this list. I would agree that they still need some work, but when I start to see across the group a lot of pocket pivots and Kahunas, I think something's happening in that group. The next group showing some movement, internet-based services. Again, these are trying to find a bottom. These are not stocks that have been huge leaders of late. C-Trip, you look at a weekly stock chart on any of these, and you should see a nice move up, and then a bunch of junk bouncing around the 50. The 50 is rising on the weekly, which is about the 200, a little bit over the 200 on the daily. So you took out the 200 on a Kahuna, turning green. Doesn't look really good to me to go out and jump and buy it right now, but certainly does look somewhat interesting to me there. Priceline, is this a good buy point? Sitting on the 200 with the Kahuna in a squeeze? Maybe. Certainly a support breakthrough here would be problematic. Great earnings per share coming in. TripAdvisor looks exactly the same. Support on the 200. SoFun failed at the 200. This is a Chinese internet, I believe, real estate slide. You see a run up. This had a 5-for-1 split, so up to nearly 100. Now it's down here after the split. Is it putting in a bottoming signal? I'll be looking for some MACD divergences here to see if we have a bottom coming in. Food manufacturing has been strong ever since the last meeting when we noted that it was good to be in chicken. Mondelez is a Food and Kindred Products. I think this was a spinoff, from Kraft Foods. And there's some activist investors in Mondelez, and you could see it had a big gap up on Wednesday, held it going into the week. It qualified for a Bible gap up for Gil Morales and Chris Katcher, and it's probably still viable on that note. White Wave Foods had a lot of talk on CNBC. Kramer was talking about Mondelez or somebody buying them potentially. Hain Celestial Group, gone sideways, but a couple of kahunas and a pocket pivot breaking above the 50 out of a mobile breakout from a squeeze. Looks interesting. So again, this boring staple, which is probably in consumer staples, not discretionary as a group. Consumer staples, those are the things that unfortunately you see moving in a period of time related to market concern. And you could see off the lows in February of about 47, a move of about 15% in General Mills. Application software, changed industry group. Electronic arts comes to the top. Now remember, this is today's price minus yesterday's price times volume, so big volume as well as big price moves matter. Take-Two and Electrical Arts were on the move this week with a Bible gap up on Wednesday. You can see the big volume coming into the stock. Athena Health, there are some major activists playing here, some saying it's worth 20. I know this company well. It's a great company, and they have a great product in healthcare, moving a lot of the billing, transcriptions, and collection to a central entity and doing a better job on it. You know, the market's given it a crazy multiple. Even with the sell-off, it's got a multiple of 452, and that's the problem because it doesn't have massive earnings per share growth, at least into the near term. I wouldn't touch this with it's kind of like the Herbalife without the criminal aspects of hedge fund managers fighting over it. And at the hedge fund conference this past week, some people came out and said it's worth $20, hence this gap down here. It's been a great stock. I just think it has gotten expensive. Here's another game, Activision Blizzard. So gaming stocks doing well right now for whatever reason. Number 8 is advertising and marketing. Omnicom, their merger was canceled, and they must have been the acquirer because they had a pocket pivot, massive volume on the stock, and a move up on Friday. The other one is set to potentially drop 10 or 15% because the merger is called off. You know, this thing has sold off ever since they announced the merger, so maybe you see this one come back up to the 50. Interpublic, I did like this stock. Let me give you some more dates because it looks, you know, it had a nice run up, has been going sideways. You got moving averages coming together here. You had a mobile breakout, a Bible gap up on Friday. Everything's green. Pocket pivots, kahunas, pocket pivots and big volume. Gotta like this. This was one of the ones that made it to my buy watch list this week. Number 9. So I typically, what I'm doing is I rank them by force. I'm going after the top 10. I click on the one I want with the left mouse. I right-click, change the index group. It shows me the things that are in there. These are some renewable energy plays. Solar City, sort of at the OK Corral, the shootout. It's on the 200-day moving average. Will it run and gun, or will it fall into the abyss? I'm betting it goes up. It's at natural area of support. Let's hope it doesn't turn into resistance and drop. Universal Display, don't know much about this company. Had some massive earnings coming into the stock and had a turnaround on Wednesday, Thursday, big gap up on Friday, 2 kahunas. This one showed up on my high volume scan during the week on Wednesday and turning green here, mobile breakout. You have a volume, you have a kahuna, and a PSAR reversal. This is one that looks interesting to me as well, but it did have a big move, and it might be getting ahead of itself. And the last group I want to look at, I like SunPower. There's some solar stock earnings coming out this week. SunPower, their earnings are out, and they were a beat. You can see on the weekly a big run up. Test of the 50 weekly or 200 daily-ish moving average. It's at the 50 now. We'll see. I don't like this candle on Tuesday, but I didn't like much in the market. It was trying to break out with some good numbers on Tuesday and sold off into the finish. So that was the top 9 and the 10th one, home product stores. And Just quickly look at the first couple. This is what I do every night. I go through the top 10 groups. I look at the stocks that, don't do it that way, that end up above the calculated index for the group. So here is Tuesday mornings. It doesn't do anything for me. Lowe's Company, below the 200. Home Depot had a good thing in Barron's a week ago. It didn't help the stock, below the 200. And I don't really like these, so I'm just going to get out of them. But I usually look at each stock up to the index. And whether you look at the top 10, 5, 20, that's certainly your business, your call. And these were ones that were up. For someone like Alex who wants to find the things that aren't working in the market, I might want to look at the force down on, you go to the right group, and you could see what wasn't working was banks, semiconductors, steel, life insurance, hotel REITs. Let's just look at some of the banks real quickly. Bank of America certainly struggling to get out of its own way, below the 200-day moving average and beat up. JP Morgan doesn't look like much, but it had a pretty interesting MACD divergence pattern, and I'm going to ask Alexander Elder about that tomorrow. I cut off TradeStation because of the internet use, so I can't go back and look at that. So that's what I do. I go through the market, and the market, I think, is tenuous at best, but I'm hoping for at least an early week improvement, gets to a better position of shorting, and now look at that. The market, the NASDAQ has turned negative. It's given up the gains. Wow. Wow. Yep. Russell holding up a little bit above fair value. This is why you don't get too excited early on. Most important slide that I could show you, let me see if I could find it here without causing too much of a distraction. When I cram my screen resolution, it messes up all my icons. So that's why things look kind of funny on my screen. I'm looking for a specific presentation that I gave. And I really don't want to not give this one slide, because I don't want people to have the wrong impression that I'm so bullish that I don't think anything bad can happen in this market. I am skeptical of those futures. I am far from bullish. I would love to see the market move up for a couple of days and give me a better position to short in, but I am at the best concerned about this market. So I'm looking for my OC presentation from March. Here it is. That's the wrong one. Again, just for those who haven't been on my calls before, there's a method to what I want to show you this for. It really is, I think, and I'm just concerned that some people from this meeting might be watching it, and I really want you to see this. That's number 2 in OC. All right, so this one. All right, this is the most important slide of the night. This slide is smart people picking stocks at a monthly meeting over 15 months. An even smarter person in the room then tracked performance over 20 and 40 days. So let's think about what is the same. Same smart people picking the stocks. Same basic techniques used in picking the stocks. The only thing that mattered or varied over each month was the strength of the market, from strong, mixed weak, and weak. The point of the slide is it doesn't matter how good charts look. If the market sells off, then your picks will do poorly. So in a strong market, their picks were up 100% in the first 20 days in the first month. At the end of the second month, they're up 78%. So there's a couple of messages there. Strong markets, wind at your back, attack, and you can make money by going long, but don't hold them forever because the longer they held them, the returns diminished. Mixed strong, not quite as good, although I'll take an 18% on my portfolio over 2 months anytime. Same people picking stocks were down 50 and 32% respectively in a mixed and an overall weak market. And in a weak market, they just got worse and worse and worse. So this is, at best, a mixed market, and it may go very weak very fast. So I got to be careful. Last thing that I like to do, and I'm just going to show this trick because there's a lot of newbies here tonight, is if you go into the designer, this is one of the secret weapons of HGSI and one of my favorite things. And I want to take off my filter. I want to actually want to take it down to the things that I buy and sell, which would be, actually, I want to limit to $2, 2.5 and 150,000 shares, which is kind of on the light side anyways. All right. And what I'm going to open up are these things called smart groups, which are pre-done for you searches and ranking. And I'm going to pick my favorites. I'm going to tools, group, inclusion report. The hypothesis is that if these smart groups, which are done for you, identify the best stocks in the market, then the stocks that are in multiple smart groups might be the best stocks, and that's where you should go spend time. So here's a little shortcut. Let's pick my favorites. Gallardi Sprinters. Woodward and Brown, I like best criteria, best of, best under 15 demand. Growth, HGS 100, leaders, QEPs, groups and stocks to the upside, and strong EPS rank. Under my list, I like breakout from a squeeze, pull back to the 50 with a kahuna, and from Morales and Catcher, I like Bible gap ups and pocket pivots. I've made a group called Web Gems, and let's just call it late night because it is late here. And this has gone on way too long. I'm going to hit OK. And here are the stocks that are in most of those smart groups or in the highest number of smart groups. So first I see a HTML file, and that HTML file will list, these are the stocks that were the winners: Micron, Trinity, Nautilus, SanDisk, Questcore, EOG, etc. These are the different lists they are in, and if I want to just cut my night short, I created a group, Web Gems Late Night, double click on Centene. Let's look at these 10 very quickly, then I'm going to show you the scorecard view to see other things that might look good, and then we're going to say good night. So here's Centene. This is a insurance play. Everything's green here, moving up off of a low. A couple of pocket pivots this week. You can see the group strength is there. Everything is green. Makes money, some growth coming in. EOG Resources, one of the oil and gas explorations. Pull back to the 50, running again. Mobile breakout from a squeeze, everything is green. Level 3 communications. Boy, probably the prettiest chart, lower left, upper right, I'm going to show you. A little bit loose or moderate, but a big move off the bottom. Everything is green. You could see up here, this is the high jump bar, and you could see it's at the top, which tells me it's probably a little bit riskier play. And frankly, looking at it, looks like it's topping, but who knows? Micron, another lower left, upper right, near its all-time highs, current highs. Everything is green. And don't forget that there once was a time when this was a really expensive stock. And if you go back in the turn of the century, this was a stock that was a big leader, $100 stock or more. Here's Micron, makes the list. Nautilus Group. Nautilus Group is a sporting goods manufacturer. I got the equipment. was sort of quiet in a gradual uptrend, had some positive news. Look at the volume that came in. Big move up here, Bible gap up. Still looks interesting. Quest score is a takeout, so we're going to skip it. SanDisk, the earnings are slowing. Lower left, upper right, everything you own from cameras to computers to smartphones uses a SanDisk memory chip. And Skeechers, I looked at this a couple weeks ago, coming off the 50. Several of the shoe names look good. Look at the earnings per share coming in. So that group inclusion filter, and then as I saw last week, some of the Chinese distance learning companies look good. Continues to base. I need to see something to get excited there. This is not a week of great-looking stocks. This is a great-looking stock. This is Trinity, one of the train manufacturers, a big winner in the fracking world. Lower left, upper right, all-time highs, everything is green, makes a nice amount of money. And that's the top 10 I found by losing that last thing. So lastly, you can always open up your warehouse view. And I start with by going into all securities. And I want to take off everything, go to a no filter view. And you can see there are 8,000 securities in the database. And now I can pick various views to have my favorites come up to the top. But right now I'm in what's called a scorecard combo, no filter, all stocks. Now it was Zales. No, not Zales. I don't like this one here because it's a 9,000 or 8,000 stocks, and many of them are cheap. So what I do is I go down here to 50 and 150,000. I'm now down to 3364. And these are what I typically scan. The scorecard view is a balanced technical and fundamental. There's my Centene, there's my Trinity. Amerisourceburger is like McKesson, some of the automobile dealers are up at the top. So one way to see what's leading is just to do a scorecard view. Gallardi has his sprinters, which I like as well. That finds some technically strong stocks. You can notice good earnings per share rank, great relative strength and group rank, high ERG stocks, all A and B accumulation distribution. These are some of the leaders there. There's that Trinity again. Or I could go into certain things like elder force rules. And for those that are elder aficionados, let's pull this out here. It makes it easier to see it big. Pick your poison, come down here, and here's force index rules. Buy when the 2-day EMA of force index turns negative during uptrends. So click on that, and these are the 394 stocks that made it to the list. So this would be one way. Those who are here this week, we looked at Alcoa. We looked at Apple. We looked at several of these. Michael Kors, Maxwell are all good-looking stocks. So you can see the force 13-day is up, which tells you you're in a long uptrend. So let's just look at these very quickly. I should see an uptrend with a pullback. Let's just take off all my nonsense and look at a simple chart. Uptrend, pullback. Now we can even go into a chart here. I'm not going to show you because it's on a different computer. And again, uptrend, little bit of a pullback. Uptrend, buyout candidate, pullback. So this is a tool that you're able to filter by using the various decisions. Buy when prices fall to a new low and the force index makes a more shallow bottom. We call that bullish divergence. And now we have, with the force index, a number of stocks with some bullish divergence. So enough of that. I had a lot of stocks on my review that looked interesting, but not a lot that I'm buying until I see what the market's going to be doing. So on that note, I'll just leave that up there. These were some of the stocks that I looked at that looked compelling. Now, some of them, like Allied Nevada Gold, excuse my French, are totally beat to shit. But the reason why they're there is massive divergences. There's a one weird stock that pays a big dividend that I thought looked interesting. There's a number of the stocks that we looked at today are here as well. On that note, I'm going to say good night. Have a safe week trading. Thanks to everybody, as usual, for coming to visit. And we'll do this again next week. Really, last chance, let me know if you want to come to my meeting. At 20, I stop. A wait list will then be offered, and we'll see if I have any spots open up. Last words, I mentioned on the board that I have a trade station offer for people. So here's the deal. That's my chewing gum because my mouth is dry from talking. The meeting is 8:50 or 1100 with my trade station indicators. I believe that TradeStation has some major advantages over Thinkorswim. I use both of them. Because of that, I contacted TradeStation, and since most of the people attending are not TradeStation users, I was able to get a special offer. If you attend my meeting, whether you buy my indicators or not, you will be offered a special deal, which is as follows. You open a new account. You fund it with outside funds. If you currently have an account and you open it, then you need to, a new account, you need to fund it with a wire from a third party, not from your TradeStation account. Once you do that, you will get free TradeStation platform and radar screen for life, not tied to amount of trades, as long as you maintain a minimum balance. For those that are traders and active traders, you will receive, because you attended my meeting and used a new account of TradeStation, you will receive a rebate against your trading commissions up to $1,500. Essentially, that rebate is more than enough to cover the tuition of the meeting, your travel, and your hotel. Now, this is not a check when you sign up. This is not me waiving your tuition. This is TradeStation Securities looking to grow their book of business and saying to you, go to Jeff's meeting, try out TradeStation, and if you do a lot of trading, they're going to give you a rebate on every trading commission up to a total of $1,500. You all have a great time. Thanks for coming, and good night.